Federal Drive is presented by GEHA, Government Employees Health Association, proudly providing health and dental benefits to federal employees and their families. Visit GEHA.com.
When disaster loan programs scale up quickly, data sharing becomes critical. GAO says outdated systems and manual consent requirements limited SBA's access to IRS tax data during COVID, leaving oversight gaps even as billions went out the door. Joining me to break down why that matters and where progress has been made is Director for Financial Markets and Community Investments at GAO, Courtney LaFountain. Ms. LaFountain, it's great to have you on the show. Thanks for joining me.
Thanks for having me. I'm really excited to be here.
We're going to talk about a new report from GAO that looks at how the Small Business Administration and the IRS shared tax data during the COVID-19 disaster loan programs. Before we do that, at the highest level, why did GAO take a look at this and what were the big findings?
So we looked at how SBA and IRS share data for two SBA programs. One is the ongoing disaster loan program. This is a program that offers loans to businesses, nonprofits, homeowners, and renters after a natural disaster, like a big hurricane. These are loans that help with property damage and also to help small businesses with expenses like payroll and rent. And SBA uses tax data in the application process to verify applicant identities, check that they meet eligibility criteria, and assess ability to repay the loan. So we also looked at a related program that Congress created specifically to help small businesses during the COVID-19 pandemic. And this program was built based on the ongoing disaster loan program. There were a few differences, but it still aimed to help small businesses with expenses like payrolls and rent so they could make it through the economic effects of the pandemic. And this program isn't accepting new applications anymore. But during the pandemic, SBA used tax data to verify applicants' identities and again, check that they met eligibility criteria for the loan. So we looked at data sharing for these two programs, and we found that SBA and IRS generally follow several leading practices, and they're getting a lot of things right. They have tools that allow them to quickly reach agreements on key decisions. Their agreements include practices to ensure that tax data are trustworthy and are well protected. And they're two agencies working together, so they have established compatible policies. They've got roles and responsibilities, a kind of a regular cadence for updating their agreements. So lots of things are going well. However, their data sharing process has a couple of weak spots because it's not fully automated, and those steps can create bottlenecks. And, they both agree that a fully automated process would be more efficient, but they've got different views on how to get there, and that's they haven't made as much progress on that as they could.
Well, let's back up a minute because the report says that nearly half of the approved disaster loans didn't have verified tax data in their application records. You talked about them making improvements and doing more data sharing, but I think it's pretty interesting that at the beginning of the COVID disaster relief law, Congress expressly prohibited that SBA could not collect tax data. Talk about why that would be written into a law and what impact that has on potential fraud detection for them.
That's a great point. So, right, the fact that almost half of the approved applications we looked at didn't have some kind of tax-related document from IRS is largely a result of how that program was designed. Tax data weren't part of the application process until April 2021, and that's over a year after Congress created the program in March 2020. Tax data wasn't part of the application process because Congress wanted loans to go out to borrowers more quickly. So when they set up the COVID-19 loan program, they allowed SBA to approve applications based on kind of a minimal amount of information, credit scores, and some self-reported information, and really restricted SBA's ability to use tax data the way it had been using it in the other program. So loans got out the door more quickly, but they really limited SBA's ability to ensure that the loans were going to eligible borrowers instead of, fraudsters or other people who didn't qualify. Once they removed this restriction, of course, SBA said that it made it a lot easier for them to ensure that program integrity.
SBA still can't access IRS tax data without borrower consent, right? And that consent is still processed manually. Is that part of what's creating some of the data disconnects?
It is worth noting here that taxpayers provide a lot of data and information about ourselves through our federal tax returns, where we live, how much money we make, Social Security numbers, business ID numbers. And it's because of all this that tax data are protected and confidential. And so that's why IRS requires taxpayers to provide consent before their tax data can be shared with another agency. There's a limited number of exceptions there that require specific authorization from Congress. But anyway, so it's not necessarily that consent itself is an issue, but the fact that SBA and IRS are using a manual approach to verify consent. So it's kind of those two ingredients together that can create issues.
I'm speaking with Courtney LaFountain. She's Director for Financial Markets and Community Investments at GAO. Let's talk about that disconnect there when SBA is seeking consent and there's manual processing involved and IRS sends over data. What sort of problems did that induce into the system, both for accuracy and for detecting fraud?
So where these manual steps really become an issue is when the volume of loan applications increases a lot relative to the staff available to work the process. This is something we saw during the COVID-19 loan program, especially on the IRS side. They faced some challenges having enough staff to work the process and also allocating work to the right processing centers. And what this all meant for borrowers is that it was taking a lot longer to get their loans. SBA tried using some workarounds, like asking applicants to provide tax returns themselves, but this had its own challenges. The Inspector General reported that SBA was still approving some loans without having the tax return data to help verify information, and some of the loans still went to ineligible applicants. And so this workaround wasn't fully effective.
GAO has made some recommendations to improve the process, including some potential statutory changes and technical upgrades. Walk us through those recommendations and maybe which ones might be at the top of the list.
So again, when we looked at how SBA and IRS share data, we did find that they're getting a lot of things right. Like I said, though, the data sharing process isn't fully automated and has those manual review steps. So that means there's some opportunities to improve efficiency. Our recommendation is for SBA to take some kind of step to improve efficiency, but we, typically defer to agencies on exactly how to implement our recommendations, and that's what we would do in this case as well. One option is for SBA to pursue legal authority to obtain tax data directly from IRS without first obtaining taxpayer consent. And this is an option that would require Congress to act and amend the Internal Revenue Code to give SBA that specific authority. If this happens, then those manual review steps where SBA and IRS are kind of like checking that consent forms are signed and complete, those steps go away. However, SBA said it hasn't really pursued this authority because it's not broad or flexible enough. And, if you get the authority for one program, it doesn't necessarily apply to a future program. So SBA has some reservations. The other option is for SBA to adopt technologies that could make the data sharing process more efficient. And this is where they told us they're prioritizing their efforts. They didn't provide details on exactly what these technologies look like, but that's the route that they said that they prefer.
I've been speaking with Courtney LaFountain. She's Director for Financial Markets and Community Investment at GAO. Thanks so much for joining me today.
Thanks. Great speaking with you.
We'll post this interview and a link to the report at federalnewsnetwork.com/Federal Drive. Subscribe to the Federal Drive wherever you get your podcasts.